Hi everyone, I hope you are doing well. Welcome back to another satirical episode on the fake propped up housing market that have concocted yet another scheme to fool people into leveraging everything they have into buying a house at the highs. Similar to last time, we're going to talk about anything related to economics in plain, simple English, nothing too complicated to understand. Even teens will understand what I'm saying. Some of my commentary will be entertainment and parody. Look, people are very stressed when listening to this stuff. You need some entertainment. I mean, come on, this is getting hilarious. In the previous video, I talked about how Freddie Mac is looking to reel people in to get a secondary mortgage if they want to tap more liquidity. That's a mega wealth transfer mechanism from the taxpayers to the banks. Now it gets even better. Yes, that's right, it gets better. In the US, the largest wholesale mortgage company is called United Wholesale Mortgage, short for UWM. Guess what? They are back with a new offer to first-time home buyers, and can you guess what it is? That's right, folks, they're reintroducing the zero down mortgage for first-time home buyers, and I'm telling you right now that this is a disaster in the making, but I guess we'll find out in the future. Now let's talk about the details. Let's say you are a first-time home buyer in the market for a new house. Inflation has made it hard to save money. You want to have the cash to put down a down payment, but you just might not have access to that cash right now. Well, now you can bypass that gigantic hurdle with UWM's zero down mortgage plan. Here's how it works. You borrow 3% of the home's value up to $15,000 as an interest-free loan, and then you pay for 97% of the home's value with a standard mortgage. This program is eligible for people earning at or below 80% of the area's median income for the address of the home that they're buying, and folks also need a 700 FICO credit score to qualify. Now, that $15,000 won't accrue interest, but it will need to be paid back in full all at once when you either sell the home, pay off the mortgage, or refinance. So here's the problem. Because you barely have any equity in the house, you will owe more than what the house is worth if the housing market starts to weaken and prices fall. If for some reason you have to sell the house or refinance when rates come down, you also have to pay back the $15,000 to UWM immediately. And if the house isn't worth what you owe, then you'll also be in default. Now let's say that first-time home buyers get this amazing deal. The problem is that their limited budget to begin with is going to get strained even further because of the cash flow drain that comes with owning a house. All the maintenance, the unexpected expenses are going to be a burden. And wow, just a few weeks after launching this product, UWM has reported that they've already gotten a couple thousand loan applications. But let's think about the big picture. What the program is essentially doing is that it is locking in a massive number of people into the housing market at a time when mortgage rates are at multi-decade highs. This means that people who enter home ownership now are paying a premium on their mortgages every single month because of the high rates right now. And when it comes time to refinance, when rates go lower, boom, you have to pay back immediately $15,000 to UWM. This repayment back to the company is a significant cash event that many people may not be aware of when they try to refinance. Now, speaking of rates, some of you might have your own ideas on where they might be going. Let's talk about today's video partner. So today's video partner has a really cool product that I want to tell you guys about. Most of you are rather interested in forecasting outcomes of macro events, political events, and market events because these things impact all of us. This brings me to talk about Kalshi, a platform that allows people to express their views with their own capital on a range of event-driven topics. Topics that I think we are all interested in, such as what is the number of rate cuts this year? Will the Fed cut rates next month at FOMC? Will the Fed hike rates in 2024? These event-driven outcomes are actually made tradable by Kalshi's platform. The interesting aspect about this platform is that the betting odds give users an understanding of market sentiment towards these questions, and the payout ratios reflect it. Kalshi is the first legal platform in the US where people can bet on anything in all 50 states. The mobile app is intuitive to use, and I think it's really beginner-friendly. So I'm actually going to express a view right now on a fun topic that I'd like to have some skin in the game. There's an event-driven question about the number of rate cuts this year, which obviously is a big macro question. I get to choose none, one, or two. Now, at the time I did this, the FOMCs that were left in the year were June, July, September, November, and December. Now, I thought that they hold in June. That means there's 4 FOMCs left, With inflation still staying stubborn, I think 3 cuts is too optimistic. I think perhaps they do 1 cut in September and 1 cut in December. I'm going to say a total of 2 cuts just for fun. Honestly, this is pretty cool. They've got hundreds of thousands of users now expressing their views on a range of topics that are important to them. And also, Kalshi is giving a $20 bonus for the first 500 people who join with my code and deposit $100. Link in my description below. Now, back to the video. If you think we have it tough here in the US for housing, let me talk to you about the crisis that our friends up north are experiencing in Canada. First, some context. In Canada, roughly 1/3 of all mortgages are variable rate mortgages, meaning that when rates go up every month, the mortgage bills pile up. When rates come down, the mortgage bills offer some type of relief. Now, the Bank of Canada has cut its interest rates for the first time in 5 years. It's estimated that a 25 basis point cut in Canadian rates will save homeowners on average about $100 a month. That's definitely helpful, but for a lot of people, it's too little, too late. Savings have been burned through. There is a really touching story that illustrates the crisis in Canada that's ongoing, which I'll link to in my description below, about an immigrant family who moved to the country in the early 2000s. They started a family, they built solid careers, and for the most part, they lived a relatively comfortable life. When they first bought their house, their mortgage monthly payment was about $3,600, which was within their budget. They had opted for a 2.5% variable rate mortgage. At the time, fixed rates were 4%. With this mortgage payment in the mid-3000s, the family was able to have their kids enjoy extracurricular activities like taekwondo and soccer. They were also able to enjoy going out to restaurants on a weekly basis, and of course, the annual vacation trips. As the Bank of Canada raised rates at a stunningly rapid pace, like the Fed did here, the family saw their mortgage rates go from 2.5% to 5%, and then to 6.45%. That translated into a mortgage payment jump from the mid-3000s to first $4,300 and then to $5,200 a month. And this all happened within a year. Imagine that, paying an extra $20,000 a year in mortgage payments, and at the same time, the property value is not going higher and everything around you is more expensive than before. The family shared in their story that they completely stopped eating out, paused extracurricular activities for their kids, and said that travel was then out of the question. And by the way, this family made the median level income in Canada. By no means were they struggling. They were in fact, as a household, making 150,000 Canadian dollars every year, which statistically means that many people in Canada went through a similar experience in terms of cutting back, even though they made a healthy salary. Okay, so now that the rate cutting cycle has begun in Canada, my US viewers might have the logical thinking that, well, surely buyers and housing demand is coming roaring back, right? Open houses in Toronto must be filling up. People are getting off the sidelines to get back into the housing market. The truth is actually the opposite of that. In fact, even after the recent Canadian rate cut, numerous Canadian realtors are talking about how the housing market is still deeply in a buyer's market. Specifically, they talk about how inventory across many major Canadian cities is going up from the sales to new listing ratios. Prices are still stagnant. Now, I think that this is a personal opinion, that the last 2 years of higher mortgage payments and inflation have drained a significant portion of Canadians' middle-class financial resources, and that even with this latest rate cut, demand is not nearly as strong as economists may be thinking. If anything, the buyers who are getting back into the market are investors, which will tilt the percentage of houses owned by investors in Canada up even more in the future. Previously, investor purchases made up about 30% of Canadian housing sales. I think it could be a higher percentage in the future. Another data point that discusses economic weakness among ordinary people in the country is that Canada's unemployment rate is now at a 2-year high at 6.2%. Now, the Wall Street Journal reported that almost all the jobs created in the last month in Canada were essentially all part-time roles. So that's not good. Now, if you want my opinion, I think that buying into housing today at today's prices is going to turn people into a house-rich, cash-poor situation. This is a terrible combination if there are job losses and the economy shakes up the job market. All the maintenance, all the property taxes, all the repairs, these things will just weigh you down when what you really need is liquidity. So if you haven't bought a house yet, honestly, your life isn't that much worse off. There's the phrase, cash is king. There's no such thing as house is king. So if you're a smart working person, You can honestly get rich without ever owning a house. There are more ways to build wealth than just the property market. If you're going to buy a house, do it because you need a nice place to live, not because you think the house is going to skyrocket in value like it did in the past. At best, the house goes up with inflation. At worst, the house gives you plenty of maintenance, repairs, and property tax headaches in the hope that it's going to be your best asset in the future. Now, it was once famously said that life is a dream for the wise, a game for the fool, a comedy for the rich, and a tragedy for the poor. Now, with zero down mortgages, the next phase in housing is honestly a comedy for the rich as they see how ordinary people deal with this situation. Look, I told you that this video would be semi-satirical, so have a good laugh, all right? Don't be too stressed out. I'm just looking out for you. If you enjoyed the video, leave a like and subscribe. Thank you to Kalshi. I'll see you in my next one. Oh, and be careful about those zero down mortgages. They're not doing this out of the kindness of their hearts.